Good afternoon, everybody. MVP here. It's Sunday, the 2nd of October, broadcasting from the South Coast in the UK. And it's just my usual weekly roundup of what's happened in the forex market this week. The G8 currencies, the 8 main currencies that the world pretty much moves with. And just starting here at my FXCORRELATOR.com homepage. This is my website. Go there. Please, 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 if you can, register. This is the CV page. Talks a little bit about me, my background, what I've been involved with over the years. Please join my mailing list. The reason being, it'll keep you up to speed with training courses and other things that are going to come hopefully next year, but also market updates and anything else that springs to mind. It also very, very quickly gives free links and systems. It talks to you about I'm at Forex Factory, I'm at TradeToWin.com, big forums, my YouTube channel, and now I'm on Twitter as well, all under the FX Correlator banner. So if you type that in one way or another against all of these areas, you're going to see me, and I go by MVP. That is my call sign on all of these things, MVP. And other thing you'll always see is this little chap here, Mr. Corey, as I call him, painting his little picture there like a kind of crazy Jackson Pollock kind of picture, those crazy ones you see in the Momo and around the world. And that's my logo as well, so that's me. I just wanted to give you a quick update while we were here on the training side of things very quickly. People are waiting for the 2017 training that I'm going to bring to the table. I have to say, guys, my consultancy commitments are making things pretty tough on this, but I am making some headway. I've made some headway the last week, I'm proud to say. I've been doing a lot of research and discussions actually with some video training companies. I'm not going to... Obviously the courses will, inject a lot of videos, ebooks, PDFs, question and answers, interaction, all that kind of stuff. And there's some great software out there now that can do this, and I'm just going through some due diligence on some of these guys to see what they can do for me and when I do upscale these things. So update as of October. We're looking at some video training now. I'm going to start building some of those modules and courses and load some content in, start testing that, beta testing that, so that's good. And it will start off with probably some stuff around forex strength meters, very high level, and I'll talk a lot about strength meters, how to use them. Strength meters are used a lot now out there in the marketplace. You will know how to get hold of them. A lot of free stuff out there, a lot of expensively pricey stuff out there as well for some reason, which claims to have algo driven things. Well, that's pretty much nonsense personally, but let's not get into that. I'll talk about that more in these videos, but how to use them. And there's a lot of stuff people don't tell you how to use them. I could write a book on how to use strength meters before you even start me on any specific area, so we're certainly going to be covering that, so you've got more of an idea of how to use them and when to use them. And then more importantly, I will get into how to seriously trade with these things. Especially I want to get into my scalping. Scalping is a very specialized area of trading, as you know, as people know. Some people strangely go straight into it from novice, and that doesn't work, guys. You can't start off as a novice in that field. You will get slammed. It is specialized. It needs people with experience. You need to know what you're doing, and I'm going to try and run a course next year, probably by the middle of the year. Very, very specialized for people that really want to make money in this very, very difficult field. There are very, very good returns there if you know what you're doing. Very good returns, and again I'll explain why. Most people steer you away from this area because they say you can't make money on it. That's nonsense, absolute nonsense. It's only because the people that are telling you can't make money on it. So it can be done, trust me, and that's another thing we'll be talking about next year. So they're the courses I'm trying to build, make happen, and it's work in progress alongside my consultancy job and other things really, as life goes on. As we all know, there's other things we've got to do, family matters, life, other things, holidays, throw them all in. But that's basically me. So enough of this nonsense. Let's take a peek at what happened in the week, and it's been quite an interesting week. So let's look at the market. Okay, I think if you've followed YouTube, looked at some of my video channels, downloaded my FX Correlator free indicator, which is all available, go to the website, you'll find it all free there. You'll pretty much understand what you see here now. You'll see 8 currencies all in different colors. Colors are at the top here, and it is a standard. I never change the colors of my currencies. Other strength meters, other traders will have different colors. This is what I use. This is what I use back from the early 2000s, and I think I never diverted from the original meta quotes and meta trader sites, which gave young traders at that time an idea to start playing with this stuff. So I've never changed that. They're the colors up there. This is what I call a fixed start, or a kind of non-MA based FX correlator. It's not free, sorry guys. This is one of many I've built with some programmers I've used over the years. What this does is basically it gives you a fixed start point and zeroizes everything. So what this has done is at the start of last week, which would be around the 26th of September, Monday the 26th, it zeroizes everything and then shows you the degree of movement, either up or down, of each currency. How many pips was it moving that week? Okay, so what you're looking at here is last week's pip movement on each currency. Okay, so obviously the name of the game in trading is you buy currencies that are going bull, going positive above this zero line, and you sell currencies that are below it and falling, diverging away. So divergence is the name of the game. Bigger the divergence, the more money you're going to make. Okay, I wish it was as simple as that, but we all know trading is very, very difficult. But that's how I peruse the market and give you an idea of what's happened. Okay, if you're ready, we're going to look at Monday. See this? I'm moving that. That's Monday. We start early Asian, which is over on the left. As we come through in the middle area, generally will be London morning, and then towards the back end of the day is clearly when the US comes on stream, and then into the back end of the US early Asian session. We cycle through the three cycles, the three time zones every day, and let's take a look at Monday. So what happened Monday? Right, well, the first thing I'm going to do is move these around and let's see what happens. So let's go into early Asian, and I'm going to take you through here. So all the way through these dotted lines, that's Asian session into early London. Okay, so what happened? Okay, looking up here, we can see that yellow yen had a great Asian session and a very, very good early London session, and it got up to about 50-60 pips in the morning session. So you would have been buying yen on Monday, and if you watched or if you follow my scalping threads, I think I really was actually having a good morning that morning. You had some good divergence. Normally you can only expect to go up no more than 20 or 30 pips. You usually around these levels, guys, for a Monday morning, because the market is waking up and it needs its cup of coffee. But look how we got some very, very good moves outside of that range, even by the early London session. That's excellent scalping for a Monday. Excellent volatility. Volatility means we got a chance to make some serious money scalping. Okay, so what happened was that, as you can see, we got the yen bull right way up to the 60s. And down here, after some very early warm-ups, we got a very, very aggressive sell on sterling. Sterling came off to -6s, and so did the CAD. So three alpha currencies, as I call them, the currencies that are flying, they were the ones to be following, and then you hang on the coattails of those trades by trading them against other currencies. Doesn't necessarily mean that you bought yen and sold sterling in one pair. As a scalper, I don't tend to follow that. I find it too volatile. My stops, I'm looking to try and ideally get down 5-6 pip stop levels, so I'll usually go off these guys with something a little bit softer, like the US dollar is always a good foil, the euro, even the Aussie dollar. These are less volatile currencies and therefore good to partner up on any scalping pair trade. But that was the big moves. Then inevitably, as these things happen, a lot of kickback. The yen came back, early US, so did sterling, came back dramatically, all the way back almost 60 pips into the US session. US dollar was sold off into early US, that was good. And look at the CAD. The CAD actually had a chance to bounce virtually back to zero. It came back to squaring away and then came on back through middle, early US and then into later US. That is something like a 100 pip sell-off in the US session. So very, very lucrative. US dollar until later on really wasn't helping things. You needed the US dollar to be bull to really get that as a good move and buy UCAD, but that's not bad. There's plenty of other stuff there you could have been buying. Euro, the Aussies, even yen on the CAD there, if you were bold enough to take those kind of spread levels. So that was a good day Monday. And look at yen. See how it holds here, this area here? Can you see here? I'm just going to click this. Look at that support level there. You see, indexes, currencies like this, they perform just the same way as any other kind of instrument or indices or pair or stock market price action. Look at that. That's what they call a support level, isn't it? So it comes down to this level, massive trade up, obviously. Support level held, off she goes again and through. You see, very interesting. You can trade this way. So the yen was definitely a buy later, US session into early Asian. Okay, so that was Monday. Right, we're going to speed this up now because I want to talk about the three duck Corrie as well. So let's move this through. Tuesday, what did we have? Primary movers again were, in summary, let's come down here. Look at the CAD. The CAD came back up eventually. It got down to the minus 120s for the day. Came all the way back up. Okay, that's something like a 100 pip retrace. And then can you see again here? You see, it's difficult, but there is now a resistance level here. Hits the ceiling, sells off, another 100 pip sell, and that's through London into early US session. When currencies are flying like this, do not ignore them. Go in there and trade them. Absolutely fill your boots, guys. What else was going on? We had fairly flattish. You can see the greenback there all the way through. Fairly flattish day on there. The yen came all the way back in, as you can see, and then again just proceeded to come up and into again. Nice bull session there. That's London bull. Sterling sold off in the London session, and again another bull session. So the name of the game Tuesday was obviously selling the CAD. Most other things were buyable, really. There wasn't anything else selling that heavily. It was all about the CAD on Tuesday. Wednesday notoriously can be a fairly flat day after the excitement of the first 2 days, and again this day was no exception. If you have a look here, you can see that not many of these currencies are really ranging that much through this time period. So Wednesday would have been a fairly flattish day, but again there's always places and areas you can trade. I'm just picking up here. I noticed that actually see here the turquoise New Zealand dollar have been selling off from mid London. It reached its high, selling on through, and just keeps selling on through London there. So that was a good session that day. You know, selling New Zealand dollar into the US dollar would have a fairly good trade. Everything else was fairly choppy. I have to say Wednesday morning would have been quite testing for most people. Again, there's always a way of making money, but it would have been quite testy Wednesday. And again, my scalping threads would have probably sympathized and empathized with people that we were having a tough old time. Later on though, again things started to happen. Look at the CAD. The CAD again well down into sell-off areas here. Quite rangy here. Can you see here? It got quite rangy, bouncing, and not much going on. It was quite a tight range there. It faked everybody. It came down here and persuaded people it was going to sell off, then came back. But when it did come back, it really exploded. Can you see if you come up here, and I'm not sure where you want to classify this, but that's roughly around the resistance level there. You see it coming across. It breaches that, and that is a colossal move. That is in the region of 60, 70. That's about 140 pip move, guys, all the way through the back end of the US into early Asian session. So the CAD was flying. Lots of presumably economic news coming out and other things, but very interesting. The CAD's certainly been an interesting currency to be trading here. And just again mentioning it, the yellow yen. You can see up here the yellow yen trying to push back and get up into the bull area here. Massive sell-off into that's probably US afternoon session coming through. Tries to hold around this level. So this is actually zero on the start of the week. It's got back to the start of the week. Massive sell-off through the Asian session, and that is in the region of 100 pip sell-off. Okay, into Thursday very quickly. What was a big mover? Greenback had a good bull run day. Notice that. So did the blue euro and the grey Swissy there. See, all the way through from Asian, just steady gains. So they were all buys through Thursday. Meanwhile, our more lively currencies, sterling's had a tough old week actually. Nothing too brilliant on sterling, and sterling is notoriously choppy. If you can't get it on a good old move, it will chop you to pieces, and it is very choppy here. Now I know these ranges here, and I'm going to try and just show this. The red, we're looking at the red currency, guys. Just trying to find a range there. There's probably about a 40 pip range here. So if you're scalping, you probably is more than enough here to throw in your 10, your 15 pip moves on presumably GU, or perhaps trading against the euro for me. But I mean, usually sterling is much more active than this. Usually I'll expect sterling to have been up into the hundreds here both ways at some stage, but this week it was the CAD. The CAD was stealing everybody's limelight. But again, sterling was selling off later on in the day, but very difficult to trade sterling this week. I sympathise if you've been trading the cable, as they call it. It's been a hard week to make decent pips because you haven't had a good run on sterling. So that was Thursday and into Friday, just to finally close off. Fairly tight ranging. Can you see the range here? They all were coming back towards zero. See, nothing is much more outside about plus or minus 50 pips here. See that? 40 pips. That's all you were off the start of the week. So it expanded and now it's contracted back in. And choppy week. I mean, euro was a nice sell. Nice sell from early Asian into London. So a nice selling euro. I think I was selling euro. In fact, I think I was screaming at people to sell euro on Friday morning when I was scalping, because it was a good trade into most other currencies that were buying. Obviously the Swissy followed it. Those two do tend to correlate quite tightly, and everything else was a buy. So euro was the sell for London. It actually bounced and came back off into a nice buy into the US session. But it all got a bit scrappy towards the end of the week, and that's pretty much it. Okay, I've injected the 3 duck Corrie, or the triple arrow Corrie indicator. Go and look it up on my website and learn about that. Go to the YouTube videos on it. It's a more high level strategic system that I advocate people use if you don't want to get into scalping and stuff. And all it really does is see these arrows here. What it encourages you to do is when you get all the arrows aligned in one direction, either up or down, that is one of the currencies and indexes that is worth following. So for example, here you see here the 3 yens here. So this is based obviously on the close on Friday night. Whatever that means, if you go here and go here, you can see here that this is the 4 hour. This is the lower time frame here I'm showing, the 4 hour. You can see indeed that the yen was below the zero, so it was a sell, but it was below the zero on the 60-minute 1 hour and the 5-minute. So technically we would have been looking to sell that at the back end of the day today. Okay, but what I wanted to show you more importantly is this is the 4 hour. Okay, so this is the 4 hour. Trust me, this is the 4 hour chart, and obviously the 4 hour moves much less quickly than the 1 hour and the 5-minute. This is actually the highest long term. It's the strategic email, the strategic chart, and until these guys, it takes it a lot longer to get either above or below the zero. So it's going to keep you out of trades in the lower time frames until it's ready. Do you understand that? So at the start of this week, I just wanted to comment on something. For example, like the sterling. You see here how sterling started the week as a very, very significant sell signal, and you can see how all the way through the week sterling has never been a buy. So therefore, the only trades that the FX correlator 3 ducks would have given you through the week, it would only have activated the 3 arrows on sells. Okay, so it was, if you look up here to give you an example, did it keep you in or out of trades? Well, that depends. It would have been indicating for you, I guarantee, to be trading on Monday, certainly through the London session. Why is that? Because obviously it's clear that London sterling was a bear London. Okay, and as we've said, the 3 duck is telling you only take sales. Okay, so it would have been there. It would have probably got you in possibly Tuesday morning as well on those sales. It would not have been inviting you to trade at any time during Wednesday, and pretty much probably I can guarantee that. What you're looking for is sell-off. So here it would have got you into a sell here on late Thursday, possibly not too much Friday either. So can you see how if you combine some of these strategies, it's quite a strong way of trading. It keeps you out of currencies that are not fully aligned to their higher time frames. Therefore, is it a good idea or not? Well, probably not. Now let's look at something that was equal and opposite. You see up here, I know it's a bit difficult, guys. You see the yellow yen? Yellow yen on the 4 hour has been a buy all the way through to about here. Okay, which kind of correlates to around here. You can see why, can't you? That's why it came off of buy. So how did that work for the first half of the week? Well, again, it worked pretty well. I pretty much can guarantee that during this period here, at some point on the 5 minute and the 60, it would have been screaming at you to buy yen against other currencies. And that's not a bad call, is it? I mean, depending on when it gave you those options, I mean, you've come from zero here up to about 86 pips by the end of the day. Now, if you can't, within that 86 pips of just pure yen alone, find a decent pair to trade and make some money on that, well, you know, that's going to be pretty hard not to do. Obviously depends on the experience, but that was good. Then what? Well, as it dropped through the Asian session here, what would have happened? Well, the lower time frames would have indicated sales. Therefore, the 3 duck wouldn't have been working. Why? Because at this point, the H4 was telling you to buy yen. Okay, so therefore it would have kept you out here. But guess what? You know what I'm going to say? Probably, I say probably, as we came into London and this switched back again, hopefully the 1 hour and the 5 minute would have thrust you back into potentially buying that. Now, I'm not sure where and when. It probably would have been a bit later, but again, it was there. After that, I think it wasn't until Thursday, late Thursday here, possibly, where you got an opportunity to start buying again. But look, the thing here is now we've switched to selling on yen, okay, and then it gets a bit choppy. So again, down here somewhere, I think it would have encouraged you to come in here for a sell. It would not have told you to sell here because clearly it's a buy, and so on. So that's how it works. That was a very quick summary again of how our 3 duck works. And just to switch this to the 5 minute, which is the quickest one, just to finish off, this is actually Friday. I've gone to the 5 minute, which is the trigger. And I believe on Friday, as we've just discussed, Friday really the yen on the higher time frames was definitely selling. So what we were looking for on Friday was to get the yen, the yellow yen on the 5 minute below the zero. And sure enough, it came in around, well, this is plus 1 hour, so this would have been around 10 o'clock, guys. And as you can see here, the yen is a solid sell for probably about 3 hours there. So on Friday it was telling you to sell. Okay, so I'm just rounding that off, and that period there would have been tying in with this period here, the sales. Okay, that's about 3. No, actually, sorry guys, it's that one. Around here we're kind of moving through the sell zone. I'm just trying to expand this. Actually, you see around here, this is around well, on this chart it says about 9:45, which is actually 10:45, but let's stick with 9:45 here. If we go up here, 7:45, here we go, 9 o'clock, 9:45, here's the chop, and then down. So we are here. Okay, so I can guarantee you that on Friday the triple duck Corrie was telling you to start selling yen here. So let's pick that up, shall we? Not like that. Take it from about here, take it from here, 9:45, and take it from here. So if you followed this period, selling yen into whatever currencies you felt were worth buying against the yen, you would have moved 6 to 68. That is a 60 pip move, selling the yen through this period from about there to there. 60 pips off the bat. Now add that to any currency that was rising. Now I know it's difficult. You certainly wouldn't have been selling the yen against the US dollar. The classic buy would have been the EJ, so actually you would have bought euro into that, and you can add those in. So you could have been anything up to 70-80 pips on that move. So again, just an example of how to use things. Okay guys, I've spoken long enough. You know me, once I get started, I'm not going to stop talking, and you'll find that in the training videos next year. But it's because I'm passionate about what I do. I love trading. I've been involved with trading, gambling since I was a kid, and I love it. I live for it. It's sad but true. So until the next time, have a great week coming up. Be safe out there. Trading is difficult. Never risk more money than you can afford to lose, and just be careful. So have a good weekend. This is MVP signing off. Cheers guys. Bye.